Hi, I'm Andrew. I'm the property advisor. In this video, I'm going to answer the question, how do I create wealth? Should I do it through stocks and shares, or should I do it through real estate? There are some major advantages of both strategies, and I'm going to answer all your questions in this video. I want to encourage you, please, and invite you actually to join the family and subscribe. Every week, we issue 3 or 4 videos which train you exactly how to use money in real estate to create wealth for now and for your future. So if you're interested in making money, you've come to the right place. And hey, I still buy and sell and trade real estate every day of my life. So you're getting it hot off the press. So no alarmism here, just the facts. So let's answer the question. How do I create wealth? Through stocks or real estate? I want to show you pluses and minuses of both, and you can make your own decision, and we'll come to a magic bullet tip, as always I do, right at the end of the video. So please hang in there with me throughout, and why don't you post your comments? I love to read them every day. So let's look at this column here, stocks and shares. This column here, real estate. If you buy shares in a company, it's very easy entry. You have apps like Robinhood, where it's dead easy to buy, put in $5 and get involved in the stock market. So the entry is much easier than in real estate, whereas in real estate, you have to qualify for a loan. Unless you have a lot of cash, you have to qualify for a loan to purchase the property. And a lot of the videos you see here on YouTube that talk about buying with no money down, I gotta say, it's kind of scammy. There were things you could do 30, 40 years ago when I started my career that you just can't do legally today. So be very careful what you watch, and don't pay for advice that's out of date by 2 decades. Not a good idea. Right, so let's go back to shares. Easy entry here, you have to qualify. Again, on shares, very often you can buy shares for no fees. Robinhood, no fees. In real estate, you're gonna have fees. You're gonna have escrow costs, title costs, maybe realtor costs, transfer tax costs, taxes paid in advance, insurance, etc., etc., etc. So there's fees in real estate. Now, of course, you learn how to pencil all those fees into your spreadsheet so you still make money, but nonetheless, there's fees involved. Third, stock market can crash. We just saw it with COVID, the stock market dropping an enormous amount over a 3 or 4 week period, and it creates tremendous panic. Now, during COVID, we've had this V-shaped recovery. It doesn't always happen like that. And when this happens, this crash happens, a lot of people get out, and the net is you've lost that money and it's gone forever. Now, the real estate market also crashes. It does happen. It happens periodically. It tends not to happen like that overnight. We've all seen from the 20s where people go from a huge wealth to living on the streets. So the crash in real estate is a little bit more progressive. It will take 6, 12 months. You'll see inventory levels will go up. So that's a cautionary note. You'll see less buyers. You'll see less homes pending. There are facts that you can follow through various indices that are published on the internet that you can really measure. And there's a warning sign there. I remember back in 2006, I saw this coming. I saw the warning signs, and I sold a lot of real estate that I owned. So these are very, very, very important things to consider. Next, stocks and shares don't provide shelter. I suppose if you had lots and lots of bits of paper, you could make a papier-mâché house, but it's not really shelter, is it? However, real estate, you have to think, if you have a piece of property that was worth 500 and something awful happens and it drops to 300, it still has bathrooms, it still has bedrooms, it still has a kitchen, and as long as you're able to make that payment, it will be shelter. So a lot of people whose homes in California went from 500,000 to 300,000 in the crash of 2008. They stayed in those homes, they stuck it out, their children went to school, they got married, they made new children, and then when it came around to 2015, 16, 17, they found that they had again recovered all of that money. Whereas the shares that you sold back at the last stock market crash, they were gone. And you have to take the money out of your pocket and repurchase those shares. That's a huge advantage of real estate. What else? Companies die. You have to consider that you might have a certain share that you're really excited about and something changes. COVID happens. shuts them down. Entertainment industry could shut them down. Many industries, retail sales, huge big box companies shut down. If you invest in those companies, you cannot recuperate that money. It's gone. Here's the wonderful thing about real estate. Land is forever. The land is always there. And that piece of real estate, that property sitting on that land is there. And you have insurance that if it burns down, like the stock market burns down, you get the money back. You cannot get insurance that warranties that if the stock market burns down, you understand what I mean by that, there's a huge crash, that some insurance company will give you the money back. That's not going to happen. So this is another huge advantage. Also, with shares, let's say you buy a share and the company shares are selling for $100 a piece. Let's say it goes up 15%. That's really unusual. But if it goes up 15% in 6 months, your $100 shares now is worth $115. If you invested $1,000 and you bragged to your friends at work, yeah, it's not worth 100 anymore, it's worth 115, right? So if you had 100 shares at $100, you spent $10,000 or invested $10,000, you make $1,500 bucks. $1,500. More often than not, it'll go up 1% or 2%. And of course, year upon year, over a progressive period of time, your $5,000 may grow to $6,000 or $7,000 or $8,000. And very often when you speak to a broker, they'll say, hey, we've got a fund and we can project 4% or 5% a year. So 1,000, you add on 5%, you add on 5%. That's a huge difference with real estate because you don't have dollar for dollar in real estate. You have leveraged gain because you might take the $20,000 down to buy a $200,000 house. If that $200,000 house goes up 15%, that $200,000 now goes up to $230,000. And you put down $20,000. So you don't get 15% of 20,000, which would be 23,000 altogether. You get 15% on 200,000. So now you put in your 20, the 200 goes to 230, you've got 30, you've got a gross amount of money of $50,000. That's a dramatic difference from taking 20,000 in stocks, goes up 50%, you have 23. What would you prefer, 23 or 50? So the concept of leverage is very, very powerful. Let's go further. Shares, of course, you have to pay cash for them. You can't borrow to buy them. Well, you can, but it's not a good idea. So you don't have any payments. With real estate, you have payments. That can be a disadvantage. It can also be a huge advantage. Why? Because when you have a mortgage and you have payments, if you could rent out the home for what your payment is, the amortization schedule, make sure you watch my videos on amortization, the amortization schedule takes some of those payments, satisfies the loan, and starts paying off the principal. So you gain more and more equity. Now, not only do you have the accrual through leveraged gain, you also are gaining more and more equity because your renters are paying off the loan, you're gaining equity, and you're gaining accruals of value as inflation kicks in. You need to watch my videos on amortization and see how you create wealth that way. Dividends are paid on shares. Often you see those dividends are 2%, 3%, 4%, 5%. It's hard to get more than that unless it's super, super risky. But rents rise. Where I live, homes that rented at $1,500 are now renting for $2,200, just over the period of the last 5 or 6 years. That's a huge gain. That's $700 more. That's over a 40% rise in your revenue. You're never going to see, or almost never going to see, that type of dramatic increase in dividend. So as those rents rise, you pay even more of the loan down. Therefore, you gain even more equity because the rent is paying not only your mortgage payment, it's also amortizing the loan. So you're creating a much more rapid escalation of wealth. One way to create leverage with shares is to purchase options. So you pay a certain amount of money, and the options help you control much more than just one share. But the options expire. And when that option expires, if the shares haven't gone up as much as you gambled they would, you lose your option money. With real estate again lives on. The option, if you like, that you're getting in real estate, I'm not talking about a lease option now, is when you purchase a home, you're purchasing that option for that property to go up. You're controlling that option, and that option doesn't expire. The only way it expires is if you don't have enough money to make the payment, you bought the wrong property, and the rent doesn't cover. So if your rent covers that payment, you are now satisfying the payment, gaining equity, and you are using leveraged gain so that you can keep the equity that you gain based on a much higher number than what your down payment was. I see personally, for a more rapid capital gain, huge advantages in real estate. What's the bottom line? Just do it. Pick this or pick that and do it. Because nobody makes money just talking about it. When this video is over, make a decision and just do it. Just get on with it and just start building wealth for yourself and the people you love. And it's always wise to diversify. If you're in real estate, single family homes, apartments, duplexes, even a diversification of town, a diversification of area. Some people even diversify in state, not only the type of holding. Diversification is always wise. I hope these things help. I hope it helps you understand how to create wealth. You make your decision and just do it. And stay in touch with me. Again, I invite you to subscribe so that we can be connected together. Put your comments down below. Check that like if you like what you see. But I want to remain in contact with you. So as you desire to create wealth, I'm going to share what I've learned over the last 30 years. And I think you're going to pick up a thing or two. Thanks for watching The Property Advisor.